Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club. And all three indexes are looking to post weekly gains on a nice little rally that happened this week. And most of them were looking to close above their respective 200-day moving averages, but it looks like the S&P 500 and the NASDAQ will fall just short, while the Dow is once again trading above it. And could the 200-day moving average be the line of resistance for the two indexes? The last time that the indexes traded below the 200-day was back in December of 2015, and that trend lasted until March of 2016. So if history holds true, we could be in for a rough close going into the end of the year. But we'll take a look at the S&P 500, currently down about 0.6% on the day, ending the day on some weakness, with the chart analysis score negative 85, indicating that we have a red monthly and a red weekly trade triangle, with the long-term downtrend being down. And we'll change this to a weekly chart just so you can kind of see how the week ended up. Even though we're down today, we're posting a gain of 2.3% on the week, which is a nice bounce back after losing almost 4% last week. Key level to watch is changing a little bit. Be 2,816.94. A move above that level would issue a green weekly trade triangle, indicating a move to a sidelines position for the S&P 500. Move back to the Dow, currently trading at 25,264.24, up the same as the S&P 500, about 2.3%, with a chart analysis score negative 55, however, indicating that we are in a sidelines position for the Dow with a green monthly and a red weekly trade triangle. Now that we're kind of back above that 25,000 level, your key level to watch would be 25,817.68. A move above that level would issue a green weekly trade triangle, indicating a move back to a long position for the Dow. But keep your eyes on 24,122.23. A move below that level would issue a red monthly trade triangle, indicating a move to a short position for the Dow. NASDAQ currently up about 2.9% on the week, with a chart analysis score negative 85, indicating that we do have a red monthly and red weekly trade triangle in play. And our key level to watch would be 7,670.49. A move above that level would issue a green weekly trade triangle, indicating a move back to a sidelines position for the NASDAQ. Dollar index was relatively unchanged early in the day, currently up about 0.2%, with a chart analysis score plus 85, indicating that overall we are in a long-term uptrend for the US dollar. Our key level to watch remains 94.47. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the US dollar. Crude oil continuing to be put under pressure, currently down 6% on the week, trading at 63.28, with a chart analysis score negative 100. We'll actually bounce this back to a daily chart. As you can see, we'll turn our trade triangles on. We issued a new monthly red trade triangle at 63.48, indicating that the long-term trend has turned down for crude oil. And in fact, it is traded well below its 200-day moving average, dipping down into that 63 range. This all comes on reports that there's an abundance of oil in the global supply in the U.S. as the U.S. gets ready to put sanctions on Iran this weekend, which I think will go into effect on Sunday. There had been worries that there wasn't going to be enough oil, but in fact there truly is, and that's why we're seeing a sell-off in crude oil right now. Key level to watch would be $67 even. A move above that level would issue a green daily trade triangle, indicating a move back to a short-term sidelines position for crude oil. But we did have that monthly trade triangle indicating a major trend change in the crude oil market. Moving along to gold, relatively unchanged on the day, trading at 1,233, with a chart analysis score plus 60, indicating that we are in a short-term up position for gold. However, we still do have a red monthly trade triangle in play. We'll turn this chart on, and as you can see, down about 0.2% on the week as we currently stand, and our key level to watch will be 1,213.40. A move below that level would issue a red daily trade triangle, indicating a move to a short-term sidelines position for gold. I'll back this out here and take a look at Bitcoin, which continues to disappoint, really not going anywhere. We're looking at the CME real-time index, currently trading at 6,361.34, down about 0.6% on the week, with the chart analysis score -75. Key level to watch has changed. We're looking at 6,486.29. A move above that level would issue a green weekly trade triangle, indicating a move to a sidelines position for Bitcoin. With that, every success. Have a great fall weekend, and we'll be back next week to give you some new numbers to watch.